When economists talk about the petrodollar system, they usually talk about it in terms of global finance, reserve currencies, treasury yields, exchange rates, abstract machinery. But the petrodollar system didn't just reshape spreadsheets. It reshaped the American economy from the foundation up. It changed what the country made, what it spent, who got rich, and who was left behind. Understanding the petrodollar privilege means understanding not just what it gave the United States, but what choices it enabled, and what those choices cost. Here is the mechanism, explained plainly. A country that runs a trade deficit, that imports more than it exports, is essentially consuming more than it produces. Every other country in the world that tries to sustain this over a long period eventually faces a currency crisis. Investors lose confidence. The currency falls. Import prices spike. The government has to raise interest rates to attract capital back in. Economic pain follows. The United States has run continuous trade deficits since 1975, and it has not faced a currency crisis. The reason is petrodollar recycling. When Saudi Arabia sells oil for dollars, when Nigeria sells oil for dollars, when Kuwait sells oil for dollars, those countries accumulate enormous dollar surpluses. They can't spend all of them domestically. They need somewhere safe to invest, and the safest, most liquid investment market in the world is the United States Treasury market. So, the petrodollars flow back. Oil producers sell oil, get dollars, buy Treasury bonds. That money flows back to Washington, which can now borrow at lower interest rates because there's enormous foreign demand for its debt. Washington can spend more on military, on programs, on tax cuts than its revenue would otherwise support. The deficit doesn't collapse the currency because foreigners keep buying the debt. This is what Giscard d'Estaing meant by exorbitant privilege. Other countries had to earn their way in the world, export more than they import, maintain financial discipline, keep their currencies credible. The United States got to write checks that the world cashed because the world needed what the checks were written in. The Reagan administration understood this perfectly. In the 1980s, Reagan cut taxes, dramatically increased military spending, and ran budget deficits that were unprecedented in American peacetime history. The economic establishment warned of catastrophe. Interest rates would spike, the dollar would collapse, inflation would return. It didn't happen because petrodollar recycling kept foreign demand for US debt high and interest rates manageable. The system absorbed what would have broken any other country. But the petrodollar privilege wasn't only about the government's ability to borrow, it changed the shape of the American economy in ways that are still unfolding today. A strong dollar, kept strong by global demand for it, is not an unqualified blessing. It is a trade-off that advantages some Americans dramatically and disadvantages others just as dramatically. Here is why. If the dollar is strong relative to other currencies, American goods are expensive for foreign buyers. If American goods are expensive for foreign buyers, American factories struggle to compete in export markets. Meanwhile, foreign goods, made in countries where currencies are weaker relative to the dollar, are cheap for American consumers. The result, over decades, was a structural shift in the American economy away from manufacturing and towards consumption and finance. It became cheaper for American companies to manufacture in countries with weaker currencies and sell those products back to the American consumers than to produce goods domestically. The factories closed. The supply chain moved to East Asia. The Midwest hollowed out. And Wall Street, financial services, banking, insurance, the management of all those recycled petrodollars flowing through the American markets boomed. This was not an accident or a failure of policy. It was the logical consequence of the petrodollar system operating as designed. The world needed dollars. Dollars flowed to America in exchange for treasury bonds. American consumers got cheap imports. American workers in tradable goods industries got unemployment. The same strong dollar that made gas cheaper for American consumers made American steel uncompetitive in the global markets. The same recycling loop that kept US interest rates low pumped money into financial assets, stocks, bonds, real estate, that are disproportionately owned by the wealthy. The petrodollar system generated prosperity, but it distributed that prosperity unevenly. The financial sector and asset owners did well. The manufacturing workforce and the communities depending on export industries did not. This is not a simple story of winners and losers. American consumers benefited enormously from cheap imports. American homeowners benefited from lower mortgage rates. American businesses benefited from access to deep capital markets. The question is not whether the petrodollar system produced benefits. It did. But who captured them and who paid the price? The petrodollar system gave the United States something that no previous empire had ever possessed in quite the same form: the ability to inflict economic pain on another country without firing a single shot. When global trade runs through dollars, when oil is priced in dollars, when international contracts are settled in dollars, when the global banking system processes transactions in dollars, the United States sits at the center of the global financial plumbing. It controls the pipes, and controlling the pipes means you can turn them off. Sanctions. The word sounds bureaucratic, but the reality is that the financial sanctions backed by the dollar's dominance can cripple a national economy. Cut a country off from the dollar-denominated trade, from the SWIFT interbanking messaging system that processes global transactions, from the ability to buy oil in the currency that oil is priced in, and you have cut the country off from the modern global economy. Iran has been under various US sanctions since 1979, Cuba for even longer. The impact is not merely symbolic. When you cannot access the dollar system, you cannot easily buy or sell on global markets, cannot attract foreign investments, cannot import the technology and the goods that modern economies run on. The sanctions imposed on Russia after its 2022 invasion of Ukraine represent the most aggressive use of dollar weaponization in history. The United States and its allies froze approximately $300 billion in Russian central banking reserves, held in Western financial institutions. Reserves denominated in dollars and euros. Overnight, money Russia thought it owned became inaccessible. The weapon of financial exclusion, sharpened by decades of dollar dominance, was deployed at a scale previously unimagined. But here's where the story gets complicated, because the freezing of Russian reserves did not go unnoticed by the rest of the world. Every country that held reserves in dollars, which is most of them, watched what happened and asked the same question. If Washington can freeze Russian dollars, what happens if they decide to freeze ours? The dollar was not just a currency, it was a dependency. And the 2022 Russian sanction demonstrated in the starkest possible terms that dependencies can become vulnerabilities. The weapon, when used at scale, advertised the weapon's existence to everyone who hadn't been paying attention. In September 2008, Lehman Brothers collapsed. The crisis it triggered was made in America. American subprime mortgages, American financial products, American regulatory failure. By any rational expectation, a crisis originating in the United States should have destroyed confidence in American financial markets and driven investors away from the dollar. The opposite happened. In the months following Lehman's collapse, global investors flooded into the US Treasury bonds. The dollar strengthened. Why? Because when everything is uncertain, you want the asset everyone else will accept. When global trade depends on dollars, when oil is priced in dollars, when the whole international financial system runs on dollar plumbing, the dollar becomes the safe haven even from the crisis the dollar caused. This is the most extraordinary feature of the petrodollar system. Its self-reinforcing quality. The world uses dollars because the world uses dollars. The dollar is trusted because it is trusted. The circularity is the architecture. But there is a limit to circularity. Even self-reinforcing systems have a breaking point, a threshold where the reason to stay inside it are outweighed by the reason to find an alternative. The 2008 crisis planted the seeds of doubt. The Russian sanctions of 2022 watered them. And what has grown since is something that, in episode 3, we have to look at honestly, because the petrodollar system is not ending, but it is changing. And the change matters more than almost anything else happening in global finance right now.